Hi, and welcome to this week's The Mortgage Broker broadcast. My guest this week is equity release specialist Mark Thompson, and Mark's back on the podcast. He's been on before, but I wanted to get him back onto the podcast at the start of 2025 to have a bit of review of what the market was like for equity release in 2024, but more importantly, what does 2025 look like for the equity release market? I also wanted to get him on the podcast to just have a bit of a chat about how he's working with mortgage brokers and their equity release referrals and the success that he's having so far this year with those. So yeah, that's why Mark's back onto the podcast. If you are joining us for the first time, then I'm your host, Craig Skelton. I have my own mortgage broker firm, and I'm also a coach and mentor dedicated to helping self-employed mortgage brokers and business owners with their mortgage broker business. So before we get into the podcast, if you do like this podcast, please like it, please share it, please leave us a review. That would be much appreciated. It just helps us to reach more mortgage brokers who could benefit from the insights from the podcast. So now let's just get Mark onto the podcast. So welcome back onto the podcast, Mark. How are you?
Uh, good form. Can't complain. Not getting as much golfing as I would like, but hey ho, it's January, December, so can't really complain.
The sun is shining as well today, Mark, so you have to be in a good mood. January and the sun is shining. It's the end of January. This is going out on the first Tuesday in February. So yeah, so it's the end of January, beginning of Feb, and the sun is shining.
Well, I like getting January out of the way because all my compliance comes up in January, so I've had more tests than soft make. So quite frankly, I can kiss goodbye all the testing role plays and everything else I've had to do. So that's why I'm happy to see the back of January. I can just focus on 11 months of doing business now.
Yeah, exactly.
Um,
You're free now to do the business. So, but Mark, do you want
yeah.
to like I said, thanks for coming back on, and I want to get you back onto podcast to have a catch up on the equity release market. But do you want to just do a quick introduction about you and your and what you do?
Well, yeah, obviously now I'm an equity release specialist. So all I do is equity release, lifetime mortgages. Uh, as you're aware, I came out of a state agency quite a few years ago now. It's amazing how time flies. Started doing standard mortgages, mortgage protection, and didn't quite enjoy that, having come out of state agency management. But I found that whilst I was doing that, I was also making referrals to people for equity release. And I was doing more and more referrals on that and thought, you know what, I'd like to probably specialise in equity release more. The thing I didn't like about standard mortgages is I like to know as much as I can and everything about everything. So for me, having so many lenders, so many variables, it just addled my brain. It was like, that was yesterday, this is today. I just couldn't get my head around it. So I thought equity release seems a little simpler for my mind and more straightforward and not as much change. So that drew me into that. Then, of course, equity release started changing with lots of products and lots of variations. So in a way, that got back to that sort of situation. Although I suppose the one thing I didn't like about standard mortgages is the client ringing up saying, "Oh, we've just bought a house yesterday. We've put the offer in, had it accepted, and can I have, I need a mortgage now." And I always think, "Oh my God, here we go, pressure, pressure, pressure." So I like equity release.
A bit
It gets
slower
me
than
out
Mark.
of it.
That's what you're saying. It's a
It's
good
slow, a bit
process, but
slow. I'm 63 now, so I'm slowing up as well a bit. So it suits. People seem to respond to me because I'm old as well. Generally, when I'm speaking to them, so they take on board, that I've got a bit of life experience. I'm with them in terms of age and where they are and all the things that later life starts to throw at you. So it tends to just sit well with me. So I really, really enjoy it.
good.
And it's back to helping people. It isn't just about making money for me. Oh yeah, okay, I've got pensions and things I'm taking, but I do it primarily because I need to keep busy. I need to keep my brain active. I like helping people, and that's what it's about. It's about taking somebody that's got a life problem and sorting it out for them. And it's really satisfying when you're able to help somebody out of a real financial hole in what you do. It's so much so to the point that quite often, I don't know other advisors like this, but like I've got a case at the moment where I'm still helping the client, even though I'm probably not going to earn anything out of it and never will. But I feel so sorry for this old lady that's lost her husband. I'm now helping her with all sorts of stuff, but
I know, but
hey
that
ho,
yeah, but that's the level of service
yeah.
that you've always given. And I think that's testament to you and your values, and also as well of why, which we'll get onto when we're talking about referrals, about why you do convert very well. The leads that you do get sent by brokers, then you do convert very, very well. And we've already actually paused the podcast already and interrupted from a broker sending another referral to you, which is good news. But we were able to pause the podcast.
Yeah. I've got to ring them back as soon as we've finished, and it's great. It's great that they trust me. They've got to have a trust in me, that they trust me with their clients, and that also trust me with their business. Because if something isn't right for equity release, I'd steer them back to the advisor. I don't. It's not just what you've given me the lead. Now it's my lead. It's their lead. At the end of the day, if it isn't quite right, and I look and I'm talking to customers, think, no, you should be really looking at a standard mortgage or Rio or whatever, I'll just pass them back to the advisor. I think that can be an issue with some leads, is that some clients are in between. Is it equity release? Is it standard? Is it a Rio? What is it? And as you know, I'm spending a bit of time with a few of our advisors at the moment, just trying to help them sort of understand, when is it the right time to say, actually, have you considered a lifetime mortgage? And this might be the right thing for you, as opposed to a standard mortgage or whatever.
I think
Occasionally I get some people just keep sending me things saying, "Oh, lifetime mortgage, lifetime mortgage." And I think, well, whoa, hang on, it isn't necessarily a lifetime mortgage. It could be a standard mortgage. Have you really looked into it properly for the client in that sense?
I think that's it. I think that's the which will. I got part of why I wanted you to come back onto podcast. It's been a few years since you came on initially, and I think it's yes, it is. We want to talk about 2024 market and more on what happened, and more importantly, what the market looks like for 2025. But I think it is about, and that part of the reason why I wanted to get on the podcast was it is about education for the mortgage brokers that are talking to clients who do need, or we're not just sort of saying no and then moving on because they can't do the equity release. Having that education and understanding the difference between the products is key, absolutely. But it's also as well spotting those opportunities when a client may not be right for the standard mortgage and you've gone down that route and you've exhausted all possibilities. The equity release is still an option for those right clients, and talking to you, like you say, brokers trust you, which they do because I've seen that firsthand. Is them brokers who maybe don't know you, have never seen you before, but just building up that trust with you to then think, do you know what, Mark is a great equities advisor. He does specialize on that, which is a key thing. Like we talk all the time about brokers niching and specializing in certain things. You do specialize in, you were talking about this every single day. So who better to ask questions to or and refer to than you? Because no, you're not going to steal their protection. No, you're not going to steal their mortgage because you don't. You clearly stated from the start of the podcast you got out of the resi mortgage game because you didn't want to do
Yeah,
that, which is
yeah,
fine. So that's peace of mind for the broker, thinking, oh yeah, that's great, Mark. But you do, because you see it from a broker's point of view, and communication is the key. You do give feedback to the broker. You do try and educate the broker. So the ones that you work with who have reached out to you and started and are now referring to you, you have educated them. There's an amazing relationship there, and they know that they know and trust you to go, Mark, what do you think of this? Or ask you this quick question. But then
yeah,
at the same
yeah.
time, they understand the difference between, well, is this client right? It's all about client outcomes and it's about what's right for the
Yeah,
client. An equity
yeah.
release is right for the client sometimes, but then a RIO is right for the client sometimes. A standard mortgage is right. And it's about looking at the different options that you can advise on. If you've gone down that route and think, well, it's not a RIO and it's not a standard, right, let me get on the phone to Mark and let me have a chat with him. And then Mark says, yes, it's an equity release case. That's the perfect relationship that I've sort of seen that you have with quite a few brokers, which is amazing.
Mm. Yeah, and I encourage them to ring me at whatever stage they want to chat it through. And I mean, one broker, bless her, she kept ringing me up, and I think she felt guilty. Every time she spoke to me, it wasn't quite right, and she said, "So I'm ringing you up again." I said, "You ring me up 10 times a week. It doesn't bother me." You mentioned the point there with Rios. You do get some brokers, however, that do Rio or look at a Rio, but dismiss lifetime mortgages. I've come across brokers that have dismissed a lifetime mortgage and have not even entertained it. I even had one, if you remember, I was doing a session a few months ago where one broker said, "Oh yeah, I had a client ringing up wanting a lifetime mortgage, but I said she didn't want any of that. I gave her a Rio." And I nearly fell off my chair. It was like, wow, a client wants a particular product and you've talked her out of it. Because I said, "What do you know about lifetime mortgages?" "Well, nothing." I'm like, wow. So, quite often you find that clients, once you understand the difference between a lifetime mortgage and a Rio, they don't want a Rio. I'm not saying that's always the case,
No.
but the lifetime mortgage is a very flexible product. And so, again, it's education and advisors understanding, well, what is the difference between a lifetime mortgage and a Rio, and working it from that basis. And quite often when I'm doing my sessions with advisors, that's what I would do. I'd say, right, let's just, what do you understand about a Rio? What do you understand about a lifetime mortgage? Let's just cover off all those bits and gaps in your knowledge, so to speak. And then they can make their own decisions from there.
That's the thing, like you say, is then they can make their own decisions from there, can't they? You're not so you've got choices from that outcome. What so in terms of, I don't want to dwell too much on 2024 because obviously it's about moving forward and about but 2024, good year, bad year for equity release. What was the market like?
Well, 2024, towards the end of it, started the equity release market started to recover. I mean, obviously, follow post Liz Truss, as we're probably all aware, head in hand, the market it had a record. If you look at equity release in 2022, and I know you didn't want to go into too many figures, but 2022 it had a record year with nearly £6 billion worth of borrowing. So it was absolutely storming along. Then, of course, we got all the market turmoils and everything else, and it dropped through the floor. Nearly halved in 2023, and then 2024 was obviously tragic at the beginning of 2024. It dropped away quite badly because the problem with the interest rates on a lifetime mortgage, you're borrowing money for life. Any slight variation in interest rate, and especially if it's compounding, has a major impact on whether it's something the clients want to do. But thankfully, and this always happens, people are just put off. I always say in business, I've always said, when I was an estate agent all those years ago, okay, if you have a bad few months because people aren't moving, those people don't go away. The need to move doesn't go away. You'll just get busier at a later period. It'll come back. And I think that's what's happening in the equity release market now. Everybody was putting it on hold, thinking, I can't borrow enough, or it's too expensive, or whatever. But gradually, as things have stabilised and rates have stabilised, started to come down a bit, loan to value's gone up a bit more again. They're not back to where they were, don't get me wrong. I mean, in 2022, 23, 21, we should have all been doing equity release. It was so cheap, to borrow money. But yeah, people have started to come back. And it's interesting that, certainly I'm feeling a lot busier. All the BDMs I'm talking to are a lot busier. One interesting point, and this is probably down to the interest rates, is a number of people doing drawdown, facilities where they're having money in reserve, so they only pay the interest, the prevailing interest rate at the time they draw it. That's increasing because the customers are getting a bit savvy and thinking, actually, I want equity release, I need it, but I'll get a reserve facility and I'll draw it down when I feel comfortable, and in the hope that the interest rates will come down a bit further. So the actual number of plans on drawdown was over 50%. It was only 56%. So over half of people are not just taking a lump sum, but they're also thinking, right, I've got money to draw down on at later stage for whatever reason. But some of that is because they're thinking, well, I only pay the interest rate at the time I draw it. I don't have to draw it if I don't need to. I'll hang on to it, but it's there if I want it and need it in the future.
Yeah, exactly.
Um,
That's the beauty of that product. So you said sort of 2024 was the sort of positive towards the end of the year. So you're saying like the end of the year has seen more inquiries, and certainly for what really sparked you to come back onto podcasts again was January's sort of been a bit of a lift off, like you said there. People that haven't done equity, when the market has gone a bit quiet, people there's still a need. There's still people interested. There's still people wanting to do this, and
mm.
so all we've sort of found now is that they've just moved forward into January, and you're sort of extremely busy again with the leads coming in. So the 2025 does look very sort of positive
Oh,
from that point of view.
very much so. Took back into 24, early 25. I mean, the last 3 quarters have all increased in terms of business generally across the board. Not for me,
Right.
but but they have for me as well. But at the moment, the leads are just, as you know, I'm sort of, I like to sort of do a certain amount of business. I don't want to be 9 to 5, 24/7. I've done that all my life, so I like to sort of, just be nice and steady. Recently, I've been extremely busy all of a sudden, with certain brokers just passing me, business after business after business. And to be fair, I'm a bit worried because I'm reverting back to that guy that used to work 24/7 and there was just do it because it was there, and all of a sudden I'm losing sight of this, playing less golf, doing more equity release. But hey ho, pays for the holidays, keeps me busy, and I enjoy doing it. So it's not the end of the world. I'm not complaining.
Exactly. And I think, like I say, you'll never get back to that 24/7 work in the
No.
estate agency world that we used to work in. And I think the thing is, Mark, like, with regards to one thing to sort of point out, we really didn't touch on is that we talked about trust and things like that, but in terms of the brokers that you work with already, and you have it, the the conversion is very, very good from what I've seen, and the referrals that you've had in from brokers. It's the clients are either not doing it, full stop. They're not doing equity release anymore, or they're using you as their equity release advisor. So that's testament to you in terms of what you do. So it might not be as fast paced in terms of that kind of the world that brokers are used to with the resi stuff, but ultimately it's that gap between. This is sometimes where brokers who do pension go to pension investment can't cope with that longer term
Yeah.
like longer process of sign up the client. So you've transactional residential, see a client, do a fact find, do your research, sign them up, they move in. It's like 3 month thing. Whereas equity release is a little bit longer than that, but it's not quite as bad as the pension investment stuff, which is very much ongoing and stuff like that as well. So it just bridges that gap. But I think it's good to acknowledge and recognize that you do convert because you, like you say, I'm not being detrimental to you when I say something, but the clientele will resonate with you a little bit more than they would do with a 30 something on the end of the telephone who's in a call center environment. I think that's fair.
Yeah, I think that's fair. The other thing is, I'm not desperately pushing them to complete or, I'm in a great situation where, I can afford to go several weeks or months without any money coming in if that was the case. It's not happening, but I can afford to do that. So every time a customer comes in front of me, I'm not looking at them as I need to earn money,
Yeah,
therefore I need to push this through. I'm just looking at them as a customer that needs my help, and it may be that lifetime mortgage is the right thing for them. That must convey itself to them somehow because they don't feel pressure. I go at their speed. I'm happy to go as when they feel comfortable. That's the one thing I have noticed between standard mortgages and equity releases. The clientele are completely different in the speed in which they want to work. And if you try and work too quickly with an equity release customer, you'll just lose them, blow them away. They'll just start to lose confidence because they'll think that you're working for yourself and you're just trying to push it through as opposed to them. So there's a real balance in trying to move the business through. Don't get me wrong, but without making the customer feel as though they're being rushed and hurried. and everything else. Plus the fact if they've been referred by a broker, and it's not down to me, it's down to the fact that they trust the brokers that have referred to me. So that's what makes it more effective as well. If I get business from a broker, generally I'm thinking, yeah, unless they don't need it or can't get it, it's going to come off because they've got to trust in that broker,
Yeah.
and that broker trusts me. So there's a level of trust there running all the way through with it. Whereas if you get somebody off a general internet inquiry, they don't know me from Adam. They don't know I'm trustworthy. They haven't a clue. And to be fair, I always say as well, every time I put the television on, it's all about scams. I mean, every morning it's scam this, scam that, scam the other. The older generation must be frightened stiff to
Yeah.
talk to anybody about anything
Yeah.
because it's in the thrown down the throats every day that things could be a scam. So you can sense with a lot of people it's something they want to look into, but they've got this hazy. I don't know. This is a good thing to do, and I really don't want to get caught out with this. And there's a reticence. So there's a very fragile relationship, certainly at the beginning, that you've got to establish a good trust with them, and for them to understand, But hey, normal brokers are doing that all day long. It'll be the same for a standard broker. I would never try and teach them to suck eggs.
No,
Um,
no, but I think it's also it's a good point in terms of from a client point of view because also as well you've chosen to be a member of the Equity Release Council, which is not something that you have to be. It's not part of a regulation. You don't have to be part of that, but you've chosen to be part of that because then that again, you've got your standards, you've got your values. It's all about the service, and it's all about the client and their needs. And if it's not right for them, you won't be recommended. You're not chasing the pound in that kind of way, which then
yeah,
just backs up with regards to that's not just you talking about it. It then goes backs up by well, this is the Equity Release Council. I'm a member of that, and these are the standards that they adhere me to, and the way that
yeah.
I conduct my business. So it's a good point in terms of yes, scams and stuff like that, but then the peace of mind is that you've got this independent governing body that you are part of that sort of says, look, you've got a safe pair of hands in this world with regards to equity release.
Yeah, very much so. And I encourage clients to go on there and check me out. I send them the link and say, look, go on the site if you get a chance. Check me out. Check out my reviews. And so I do that with all clients as soon as possible to try and get them to at least check out the Equity Council's website as well. And again, that's just another security measure for them, isn't it? It's not, um,
Exactly.
so
That's exactly what it is. Yeah.
just reinforces it for them. Yeah, I'm proud of the reviews we get. We've every client we've ever done Equity Release for has given us a 5-star review. We haven't had one not give us a review and one not give us a 5-star review, and that's over several years. So at the end of the day, we must be doing something right. I once got a 2-star review when I did standard mortgages. I think that's why I got out of it. I thought I can't be doing with this, and I remember it wasn't even the lad that I did it for; it was his dad.
And it
And
wasn't
I
even
was
down
so
to you. They were complaining about the solicitors. I
I
remember. I mean,
know, I know you remember that one.
yeah.
I was absolutely infuriated. I thought it was nothing to do with me. It was down to do with the solicitors. The dad
It
didn't
was.
want us to use the
It was because I
solicitor.
made that call. I said, "So you're all right with Mark? You're okay with Mark? Oh, Mark's been amazing. What a service he's given me. You've
Yeah,
given 2 stars. Yeah, because the
yeah,
solicitor. I'm like, right, okay, fine. We'll move on. We're not going to be able to educate you. Well, so
yeah.
in terms of with regards to the criteria for equity release, have you sort of seen much change recently in terms of that sort of being relaxed a little bit to sort of welcome more different types of properties to the market than what they have before?
Yeah, a little bit. I mean, mortgage broker, so mortgage companies, it's amazing. As the market drops, they all start loosening their criteria a bit, don't they?
Yeah,
I mean, as we know with equity release, the criteria really is are you old enough and what's your property like? And then there's millions of, you know, criteria about the property, and I've noticed that some companies have started to relax their view on, just for instance, flat roofs. Some of them would say, oh no, if it's got more than 35% flat roof, we're not interested. Okay. Uh, all of a sudden, well, we'll look at it over 50 or 60% or whatever. Now there's companies that say, no, well, 100% flat roof we'll look at,
Right.
So all of a sudden, you can see people relaxing their criteria because there's no point being in the business if you can't get your share of the business. And
No.
and so they are relaxing the criteria. And obviously they're all. What one interesting point is early repayment charges. In fact, like ERCs. There's a few products out now where there's zero ERCs, depending on people's circumstances,
Right.
and that's noticeable that quite a few of the companies have started to offer products reducing the ERCs. Again, that's down to the interest rates because what they're trying to do is allow clients to think actually, or 4-year ERC. There's one with a 4-year ERC. So they're saying, look, in 4 years' time, you can remortgage, get out of this mortgage, go and get yourself another lifetime mortgage when the interest rates perhaps are going to be a bit cheaper. So they're all a bit conscious that they're trying to encourage people into the market that perhaps are sat on the sidelines.
Right.
Again, I've noticed one or two lenders, because one lender does it, they all start looking down, they all start thinking, oh, they'll lend more than we will, they'll do less ERCs than us. So they all start, oh no, well, we need this product, we need that product. And just max lending for some of them has gone up, in that sense. Have started to think, okay, people are, a lot of times people don't do equity releases because they can't get enough. They can't borrow enough money to, they might have a 70 grand interest only mortgage they want to pay off. But unfortunately, due to their age, they can only borrow 60 grand. So they've got a 10 grand shortfall. So again, some of the lump sums you can get as an initial lump sum, the amounts they'll lend you has gone up because the companies have recognised that there's a need for, recognising that people need these products. So
Yeah.
yeah, there is definitely a. There's obviously hundreds of products, hundreds of different providers behind the scenes that have their own idiosyncrasies about what the product should do, what it should say on the tin. But there is some general loosening, and it's just that general natural competition between providers that's saying, God, we've had a bad 23, we've had a bad 2023, 24 is recovering, but we could do with a bit more business. How are we going to get it? You know,
Yeah.
so
Exactly.
and I'm sure that must be happening in the standard market. Not that I ever look at the standard market.
Not that you don't get take an interest on that anymore.
Yeah, not at all. Yeah,
So I think
yeah,
that's obviously showing good signs for the market. The criteria is not relaxing, but relaxing a little bit. The
yeah.
product, there is sort I think the thing is with the equity release market, from what I've seen from the outside looking in, is that it's about the products of, like you said there, the forever evolving, the forever moving forward with, or we could do this or add this in, or like the inheritance guarantee. And there's loads of different things. We'll obviously talk about every individual one, but it's an innovative market because they are looking at products that suit clients and client scenarios more and more, and that's just amazing to see. That's great from a client perspective and a regulation perspective as well, that things are moving forward for the interest of everybody.
I entirely agree, and I think equity release or lifetime mortgage in 5 years, 10 years time are going to be the norm. They are in other countries, and later life lending. People are skinned. Let's face it, people are skinned. Everybody's suffering from the inflationary pressures that we've had. We all go in the supermarket. I'm a Yorkshireman. I stand there with a row of Yorkshiremen looking at the prices going, how much? That was only £2 last week. It's £2.50. None of us can get our head around how much things have gone up.
Yeah.
They never come down, do they?
No.
So there's a lot of people that need equity release. All their money is tied up in their house prices, in their houses, in their homes, And so it'll be the more the norm that people turn to their main capital investment to take money out of it to support them in their later life. Um, and I think the old days in the 80s and 90s of the home reversion plan and people who selling the houses off to providers and having no equity at the end of it, and all these, I invested it in some coffee plantation in Brazil and everybody stopped drinking it. These things are disappearing. That it's all about how we're going to support people in later life with lending. And there are some hybrid products starting to appear as well, where people can start with a standard mortgage, but it will automatically revert to a lifetime mortgage after so long.
Right. Okay. Wow.
Yeah, that's right. Those are going to. I reckon those will just go through the roof. They're just early days yet, but they'll start to go through the roof because people think, yeah, okay, I can take a standard mortgage now, but I know that when I get to 70 or whatever, it's going to revert to revert to an interest only lifetime mortgage in that sense.
Wow.
So that the retirement mortgage market or the later life mortgage market is not going anywhere. It's only going to get bigger, and these companies can see that, and they can see that by being innovative. It's easy for you to say with their products, they're going to get more of a slice of that market.
Definitely. Definitely. I think, like I say, it is the market is only going one way as far as I can see, certainly, because of, like I said,
Yeah.
the, the demographic of a client. So, Mark, we've chatted over half an hour on equity release, so we've done pretty well on there, and we've sort of it's been good to get an update on the the market as a whole and talking about 2025. So if I'm a broker, say thinking, I just want to reach out to Mark, I just want to have a chat with him, I want to like have a conversation about how we can refer or educate, or want to be part of the education of being a mortgage broker to help referrals into you. What like the best way to reach out is that LinkedIn. I'll tag you in on the LinkedIn on the podcast. Is that the best way for people to message you, and then obviously you can contact them from there?
They can do LinkedIn, yeah. However they want to contact me. I mean,
I'll put your I can put your email address and that in the notes as well, so we can
if
get
you
you
put my email address, phone number in,
fine,
I'm happy to take calls.
fine.
I mean, we didn't cover it off, but just this one broker that just rang, just as we started this podcast, um, um, they've passed me one lead a week. Okay, one lead a week. They're
Since
only
since the
small.
start of the year, from the start of the year, one.
In the last 5 weeks, they've passed me one lead. Well, one lead a week.
Yeah,
This would be the fifth who's passed me, but the four they've passed me, they're quite small leads as well in terms of the people borrowing small amounts but then having it on drawdown.
right.
So in terms of the commissions that are paid, the more people take up front, that's when there's a bigger commission. But just to give you an idea, they in commission terms, all of those four are going ahead, and the small leads, they've got in the region of £6,000 referral just for those four small leads.
To that
Uh,
advisor, to the broker
to,
that
to,
referred
to
you.
that to that broker that
Okay, so
passed it is £6,000. But as
wow,
you know, we had one of our own brokers. He got a lead a few months ago, £3,000, just one lead. One telephone call. I remember that was a guy that I spoke to, met at the races. He says, I don't, I don't do equity release. Met him at the races. Next minute, rings me up, got a client. A few months later, 3 grand. One lead. Happy days.
nice.
So, um,
And it's important.
it's
Obviously, it's about the client outcome, absolutely. But then there is the benefit of the kick on and the from the referral commission that you do pay out to brokers. So, like, yes, it's about client outcome, absolutely, but there's also income to be generated from that. So it's a win for everybody.
Well, I remember when I certainly first started as an advisor, and you're building up your pipeline, and it can be a long time before a house purchase goes through and everything else. And I started referring equity release leads, and all of a sudden I started, a quick phone call, quick chat, next minute, there's a check on the doorstep type thing. I thought, well, you know me, if I can do less work to get more, I thought, well, that works. It
Yeah,
works for me. And all of a sudden, I'm thinking without those, my income would have been a bit iffy at the time because those really supplemented my overall income. And I also, again, because I was aware of it, I don't know. I just came across more leads and more opportunities because it was always in my mind that, okay, they're talking to me about a standard mortgage or whatever, but is there an equity release in this? Is there a lifetime mortgage in this? Is it relevant for this customer? You know, and so I've got some advisors that are referring to me all the time, and others that I think does you they either don't understand it or it just
yeah.
can't register them that they've got an opportunity in front of them. But hey, that's life in that sense.
I mean, that's
Uh,
that's the whole point of it. Like part of this, like about educating the brokers, so they do feel as though they trust you to then, so you can educate them in terms of knowing that they have got somebody to turn to go. Do you know what? Just ask a quick question about, oh, this might be a lifetime mortgage. I'll just have a quick chat with Mark, and lo and behold, a quick chat
mm,
with you, and then confirm that it is, and then you've got the referral over. So it's better to have the conversation for you and your client than just dismiss it altogether, because somebody will be doing that lifetime mortgage. If there's a client need there and that is right for them, somebody will be doing it. So it's better for you to refer it to somebody that you know and trust than
yeah,
not do it at all. So perfect.
yeah. I
Mark,
mean,
go on. Sorry, no, go on.
yeah,
Sorry.
great stuff.
No,
No, I was just going to say little knowledge is a bad thing, and some advisors have a very limited knowledge on the product or how it works, and can get it wrong. And that's the one thing that, through discussions and whatever, we can make sure that they're not going out and advising the client because they're not authorized to do that, but at least have a bit more comfort when they're talking to somebody
exactly.
about it and
Yeah,
how it might work, in that sense.
it's just having the
Great.
confidence to know to talk about that. So it's just being able having the confidence to be able to hold the conversation and then refer it. That's all that brokers need to be able to do. They don't need to advise on it, like you say, or shy away from it. It's just being able to have that comfortable conversation. So
Yeah, just ring up, and it doesn't matter. There's no such thing as a daft question. And if I'm not expecting advisors to have knowledge on it. Why would you? You're not doing it. You know.
absolutely.
It's just being informed about what might be available to a client in whatever circumstance.
Exactly, exactly. Mark, thank you so much for your time. Thank you for your education. Thank you for being part of the podcast. Really appreciate you coming back on. As I said, make sure you have all contact details will be in the notes of the podcast. So if you think about,
Yeah,
then people will be able to reach out to you anyway, easy enough. But thanks so much for your
yeah,
time.
yeah.
Really appreciate it.
No worries. Thanks for yours. Cheers.
Thanks, Mark. Thanks for being a great guest back on the podcast. Really appreciate your time and talking about and educating about equity release, about the market, 2024, what the future looks like, and how you're working with brokers who are referring their equity release business to you. If you are thinking about becoming a self employed mortgage broker or looking to start your own mortgage broker brand or business, just looking to accelerate the growth of your existing business, see my website, craigskelton.co.uk. Get in touch, send me a message, and we'll have a chat about how I can help and support you achieve your goals for 2025. Thank you for listening. As I said, if you like the podcast, please like it, share it, leave us a review. It is much appreciated. And as always, don't forget to run your own race.